Hello everyone, welcome to the channel. Yesterday we had a very clear discussion that if market opens flat, we wanted to see a positive reaction from this particular demand, or if market goes up, we wanted to see a negative reaction from this particular supply. This is what we discussed. But where did market open? Market opened below this demand. So if I show you the first 5 minutes candle itself, market opened below this particular demand. So our trade plan becomes completely flipped now. So we wanted to see a positive reaction from this demand, right? But when market opens below this due to XYZ reasons, due to global scenarios or due to whatever the scenario may be, we have an extreme demand here. We have a structure here. We have set of rules here. What are our rules? We will see the market only after 10:30, right? And we will see what is the structure saying at 10:30. This is a extreme demand which we had marked, and market opened gap down and market did a retracement. Market came down. Now if you wanted to enter a call, what is our confirmation pattern? We need closures above this. On a very safer side, we need closures above the day side. This is how we have to plan our call trade, right? At 10:30, this is the thought process you should have in your mind very clearly. If I am going to enter a call, my structure should say that there is a supply here. I don't want this enter call when the market is going to reach the supply. So I will wait for the market to break the supply and give a closure about day side. As and when I get that, then I will think about entering call on a small pullback to a demand. This is how you should have your thought process. What happened in the market? Market came back and did a second tap into your demand, extreme demand. So understand this concept very clearly. Whenever this happens, whenever you can imagine this demand as a wall, okay, when you go and hit the wall with a hammer, first time you hit the wall with the hammer, the wall becomes slightly weak. You keep hitting the wall with hammer continuously, what will happen? The wall will break one time, right? That's how this particular demand also will work. When the market comes back and hits the demand, the likelihood of this demand holding in the market is going to be very very slim. So now what happened in the market? So market came and broke structure on the first 10:30 candle. Whenever we saw this, we saw that the market came down and broke structure. So what we have here, whenever market breaks a structure, we have a particular supply. Market came and did a liquidity sweep here. And what happened in the market? This is very beautiful. You should pay close attention here, okay? This big momentum candles are indicating that big players have stepped in the market. Buyers tried to push this market higher, but they failed it. This is called buyer exhaustion, okay? They failed to make the market go higher where the sellers initially entered, right? Sellers initially entered here, brought the market down. Buyers fought back. Buyers tried to push it, but sellers again stepped in. So what does this say to us? This says that this demand is invalid because it has been tapped multiple times. Buyers stepped in multiple times. They were not able to push the market to a higher range. So there is demand is completely invalid. Buyers tried, buyers did not succeed. Sellers have entered the market. Now what should be our trade plan? We see that as part of the internal structure, this supply is now holding on, right? This supply is not broken completely. So whenever a supply is being hit, what do we want to see? We wanted to see a change in character, at least in a small time frame. Yeah, so market from this particular low point went up, came down, went up, came down, went up, right? This is the internal structure I'm talking about. Now the moment we get closures below this, what do we do? This is the structure now. So where do we enter the market? We don't enter the market here. This price out here would be somewhere in 100. For example, a particular contract, the price of the sellers entering the market is somewhere 100 here, okay? And by the time the put comes here, it will be around 150, 160. Why do you want to enter at 150, 160? You wanted to enter at a premium price when you wanted to enter, right? So where do we have here? We have a clear supply. What is our stop loss going to be? Our stop loss is going to be the swing point high. This is a swing point high where the sellers initially entered. So what is going to be our trade plan? Trade plan will be as simple like this. When the market retraces back here, we can plan a short position, keeping the swing point as our result, and target 100 points. Always target 100 points and take the market more than 100 points if market gives a big momentum moves after 100 points. So our entry point is at 22,580. Our stop loss is at 22,607. How much is our stop loss? Hardly 30 points. And where is going to be our target? 580 is our entry. So 480 is going to be our target. Simply keep like this. Okay. The moment market reverses, then we can start trailing or we can plan whatever happens. Let's see if we get a tap back to the market. So when the moment we get a tap back, see how beautifully market ran down. There was literally no resistances from the buyers. Market solidly gave this move. The moment market gave down, you can start trailing candle to candle. I closed my position here because it was around closing time. I don't extend my trades. I don't carry forward my trades. That is my general rule. You should have certain specific rules. 10:30 enter the market. See what the structure is saying. See where the supply is. See where the buyer exhaustion is. See where the sellers have entered. All this will make your trading life become very smooth if you just understand structures, if you just understand liquidity. Don't worry if you don't understand any of this. I'll put a card right up here where, and I also put a description. I will just put a video link to my course. If you are interested to learn the course, you can very well reach out to me. I can give you the course details and you can take things forward from here. This is a solid trade. This itself was like 1:4. But when it comes to your contract, this movement gave a massive profits. If you get closures above the day's high, 100% you could have entered the call. 100%, not even 100, 200% you could have entered call. But there was no opportunity for you to enter call. Market gave a very solid trade for you to enter put and very solid profitable move. All you need to know is understand structures. I will just post a video on Sunday night because I want you to spend more time with your family on Saturday and Sunday. Spend as much time with your family. Family is more important. And do not worry about whatever profits or losses whichever you have made today or yesterday, whatever has happened this week. Let it go. Be as happy as possible. That is more important. Okay, life is very short. Spend as much time with your family members, as much time with your friends. Do not worry much about things which are not in your control. Thank you so much for watching. We'll meet in the next educational video.